In this module, we are going to discuss the Professional Workshops, Inc. audit forms. This course is on auditing and forms, and it's about the PWI forms. And as I always say, it's about being efficient and effective, following professional standards, and documenting what we do properly, which is basically why I developed the PWI forms. They were for use in my practice. They are guidance for myself and my staff. At least that was the intention. The intention was guidance more than documentation, but the forms do both. The first crack at them a long time ago, 300 individual Word documents. You might have observed that sifting through and deciding which of 300 documents you needed to use was inefficient, complicated, and hard to do. Sometime after the Clarity project and the first crack at 315, I decided to assemble everything into single Excel documents. There are two audit forms, one for review and one for compilation. So you don't have to sift through 300 documents now, though there are other ancillary documents. I was then asked to share. Bob Delaney and Bob Caswell at what was then the Institute said, will you share it? And I said, sure. I thought, pretty sure, that PEG would overtake these forms, see what I was doing, and copy it. They haven't. Now, my philosophy in developing these forms and the challenge of any set of forms is a balance between ease of use and areas covered. The more complete you make the set of forms, the harder they are for staff to use. So I have chosen a minimalist approach. Every single possibility is not included. It's up for the practitioner to know to use and to know how to use standards in rare or complex areas. And for instance, reporting issues are not covered. If they were, the checklist would be longer than the 400-page CPA Canada reporting document, which is incomplete, and that's not a criticism. It's just that audit reporting is a very complicated area, and if you wish to be complete, you will have a very long form. Now, the intention is that most of the checklist steps are prompts to remind you to do something. And they're not necessarily documentation, though they may be. And as long as the file doesn't later contradict the step, if you say you've done something and it's later clear from the file that you haven't, then that doesn't work. There are also areas where just answering a checklist step isn't sufficient, so there are areas where more is needed. It's a gray box. You will fill out the gray box. And professional judgment is needed to guide how much more documentation is needed. So the areas we're going to cover today, highlights of audit standards and documentation, and how the forms are used to address these. I'm going to talk about the requirement of shall. What does it mean? How does it differ from shall document? Talk about some other things, and then talk about two important paragraphs where you have to do and document things. And then we will talk about the audit program generator, and then we will talk about using the audit checklist. So some highlights of audit standards and documentation and how using the forms can address this. Do a quick review of audit standards. Understand why the forms do what they do. What does the phrase the auditor shall mean? What did standard setters mean when they say the auditor shall? And does that mean you have to document it? If it says the auditor shall, does that mean you must document it? What must the auditor do? If professional standards say the firm shall, or the auditor shall, or the engagement partner shall, is that something that must be done? Yes, it is. But must it be documented? No. And who may do it? The first two cases, anyone can do it. If it says the engagement partner shall, that is something that the engagement partner must do. We don't have to document it unless standards say Shall document. Must we do it? Yes. Must we document it? Yes. Who may do it? Anyone. 230A7 answers the question, do we have to document everything? And it's really clear that we don't. It is neither necessary nor practicable for the auditor to document every matter considered or professional judgment made. Very clear, we don't have to document everything. Further, it says, it is unnecessary for the auditor to document separately, as in a checklist, for example, compliance with matters for which compliance is demonstrated by documents included in the audit file. Now, two things it says. It says checklists are fine ways of documenting things. And it also says you don't have to have a checklist step to document something when it's evident from the file that it's been done. 230A7 then gives some examples. A documented audit plan documents that you planned the audit. Any audit planning requirements in standards, you have a documented audit plan, that documents it. A signed engagement letter documents that you agreed the terms of the engagement. So you don't have to have a checklist step saying, I obtained an engagement letter to agree the terms of the engagement. Though, as a practitioner, I kind of prefer to have that question to remind me to get an engagement letter and to make sure it's up to date. Qualified report, complied with the requirements to qualify. In accounting estimates, documentation of corroborating and contradictory evidence documents professional skepticism. Though, in a smaller audit, maybe there isn't any contradictory evidence, so we don't have to do that. Though there perhaps are other places we can document professional skepticism. Participation in planning discussions by the partner, engagement partner, documents, partner direction, supervision, etc. Now the section says, for example, so that means that these are not the only examples. It is implicit, therefore, that there are others. Part of this is what happens when someone says to you, you must document this. You either respond with your handbook brain or your practitioner brain. So your handbook brain replies very loudly, no, I don't have to do it. It's not a shall document requirement, and it's documented elsewhere. You can't make me. Your practitioner brain will reply a little more quietly. You know, I really don't want to miss that thing. Maybe a prompt's not a bad idea. Maybe I'd like a prompt to remind me. I know I'm supposed to do that, but a prompt would be a good idea. And, you know, maybe that's not a bad idea to document that. You know, my file would be more complete if I documented it. I wonder if it's documented elsewhere. Maybe it is, and maybe I don't need to, but prompt's not a bad idea. And if you do miss something, and audits can legitimately miss things, you want to be able to argue that you did a proper audit, and you support that assertion with a properly documented file. Now we're going to do a quick review of standards. And the first purpose of that is to understand how the forms meet the requirements of standards. The second thing, my kind of view is most of the shall requirements, particularly the shall document requirements, you would probably want to document them anyway, even if they were not required, even if they were not a shall document requirement. And why is that? A quick review of other things about auditing, highlights of auditing requirements. Now the first thing is that the key message of the risk model is, and let me go down to the red, if risk of material misstatement is low, and in smaller audits it often or always is low. Every assertion, every component is of low risk. The amount of testing needed if risk of material misstatement is low is not a lot. And maybe brief control testing and some broad analytical procedures do it, particularly for transaction streams, sales. Dead transactions occurred a long time ago. brief control testing, analytical, compare this year to last year, looks about right. Maybe that's almost enough. And we need to document an explanation of why we think it's low. And the explanation is, well, I can't think of anything that makes it above low. So my documentation of that is it's blank. I didn't have to write anything down. Now, if risk and material misstatement is moderate or high, amount of testing is high for high risk and material misstatement, somewhat in between low and moderate, or low and high for moderate risk and material misstatement. Also, we need to consider negligible risk of material misstatement. So prepaid expenses, materiality is $100,000, prepaid expenses are $2,000 this year and last year. We might conclude that risk and material misstatement of prepaid expenses is negligible. And then our audit procedure is we compared it to last year. It's about the same. We're done. A brief analytical procedure might be enough for negligible inherent risk. Be careful of negligible inherent risk because cash is $1,000 and it was $1,000 last year and materiality is $100,000. Well, cash could be negative 200,000 or positive 200,000. Just the fact that it's comparable to last year doesn't mean anything. So you got to be careful of the things that you consider negligible. Prepaid expenses is classic. The other risk and material misstatement is significant. And significant is at the high end of the spectrum. And we got a problem if we think risk of material misstatement is significant. Maybe no amount of testing is conclusive. Maybe it means we can't complete the audit. Maybe it's a key audit matter. Going concern, we just can't tell. And we're going to have a key audit matter. This is really complicated. There are significant risks. Management's aware of them, but we just cannot tell if we're a going concern. And maybe we need that all the time. Now, standard setters are starting to talk about going concern being a significant risk. And if that's the case, we need a key audit matter in every audit, saying, writing a page, following the rules for key audit matters, and basically getting ourselves off the hook if it's a going concern. So testing from a whole bunch to a high amount of testing, to a moderate amount of testing, to not much, to a negligible amount of testing. That's the key message of the risk model. And in a small audit, daycare, $100,000 million in revenue, many small audits, we might conclude every assertion, every component is of low risk of material misstatement. Some people decide, oh, well, I'll rate the highest area, the highest assertion of risk and material misstatement as high and do a whole bunch of work on it for I don't know what reason. If they're all low, they're all low. And if you say it's high, you have to say why. Because of the following reason, I think risk and material misstatement is moderate or high, and it affects this assertion, and that then tells you what work you have to do. If you just say, oh, well, it might be wrong, and let's do a whole bunch of detailed testing, well, the detailed testing may not respond to the assertion at risk. Maybe that doesn't make any sense. So you have to say why. We'll talk about this more later. And we have to document why specifically. If you say, oh, this could be wrong, I just worried about it. You have to have a specific reason. It's not good enough to just go, well, it might be wrong. And if you say, well, it might be wrong and it might be this assertion, well, then it might be that this testing is good enough. None of that is satisfactory. We need a specific reason, a specific assertion, and then we will know the testing we want to do. Sometimes you come to this by saying, you know what? I think I need to test the following thing in this component. And you say, oh, gee, I think I've identified a risk of material misstatement. What is it? Oh, it's this, and this is the reason, and this is the assertion. Sometimes you work backwards. That's fine. But you need the forward logic to be able to explain it to staff. And again, it might be fraud. Well, there might be fraud. That's absolutely not good enough. And we don't care about fraud. We care about fraudulent financial reporting. So for the same reasons, well, this could be fraud, isn't good enough. The testing might not be directed in the proper way. And we have to document the assertion. It's required. And when we document the assertion, we then help to make sure that the testing targets or matches the issue. And that's required documentation. The other way you can think about this is say, well, what journal entry? If I'm doing some testing, what journal entry might I find? So I'm testing 30 purchase invoices to see that they're all approved. What journal entry am I going to make at the end? I find that half of them are not approved, but the money's been spent, it's gone. I don't have a unauthorized expense category and an authorized expense category in the income statement. If I can't say what journal entry this test is going to make me make, doesn't apply to control tests, but substantive tests, either there has to be a follow-up test, you do an analytical procedure and it doesn't look right, you're going to go, I need to do a follow-up test. So go back to risk and material misstatement, go back to the assertion, and it's got to be something that materially affects the financial statements. A journal entry that is material. What are we looking at? Fraud. We don't care about fraud. Could care less about fraud. An employee took pencils from the supply room. That's theft. That's defined as fraud. We don't care. The financial statements are not materially misstated. We accidentally paid an employee or a supplier too much. We're not getting the money back. We don't care. Maybe it was done fraudulently. Maybe it was done accidentally. We don't care. We're not designing our audit to look for that. What we care about is fraudulent financial reporting. The financial statements are materially misstated deliberately because management or those charged with governance is doing something to mess them up. Now, the first problem with this is if you come across senior management or those charged with governance participating in fraudulent financial reporting and you found a tip of an iceberg, it may well be that you just have to say, okay, we give up, we resign, because unless they now confess to the full scope of their fraud, we don't know, and we're never going to find it. The couple of times in my career that I've been involved in this, we found the tip of the iceberg, but it wasn't till the person on their deathbed admitted what they had done that we found out the full scope of it. If people were lying, people were covering it up, and if they continue to lie and cover up, it's a problem. So assets are too high or expenses are too low, revenue is too high, liabilities are too low, expenses are too low. And for instance, if we say, well, there could be fraud, let's look and see that all purchases are authorized. Well, that won't help. They've been fraudulently authorized. And that may not be the problem. We care about fraudulent financial reporting. If we identify it, we need to record that as a risk and material misstatement and do something about it. And it may be that it is not possible to do anything about it. And once we find something like this, we have to give up on the audit. The other thing is we need to ask the "Are we done yet?" test. So let's start with the simplest test we can possibly do, a simple analytical procedure, compare this year to last year, they're about the same, are we done yet? Well, it's prepaid expenses, the risk and material misstatement is negligible, we're done. Okay, I've compared this year to last year and they're about the same, but this is revenues. Is there another analytical procedure can I do? Gross margin analysis, days sales and receivables. Is there some more detailed analytical procedure that I can do? Now, the more complicated the client gets, the less likely it is that an analytical procedure like that will help. But many of our clients are small clients, and analytical procedures work just fine. They don't need to be that detailed. Simple to come up with an expectation. Are we done yet? We might be. Next, simple internal control testing. We kind of have to do some level of internal control testing as a risk assessment procedure. So if we combine D&I with operating effectiveness, we've done a risk assessment procedure, we've attained a small amount of audit evidence, combined with my analytical procedure and a little bit of control testing, are we done yet? Maybe we are, maybe we aren't. If now we need to do some detailed testing, can we do a limited amount of detailed testing? Every time, start with the simplest test, analytical procedures, make it a little more complicated. Are we done yet? Make it a little more complicated. Are we done yet? Procedural auditing. Let's do 30 expense tests. Abandon this. This was replaced by the risk model in 1986. Now, in 1986, the risk model was implemented. It was in standards. It wasn't terribly clear. And 3 or 4 revisions to standards have made it much more clear and maybe too clear. But abandon procedural auditing. So, in summary, if risk of material misstatement is low, the amount of work we do is low. We need a reason for risk of material misstatement, not just I'm worried about it, a specific reason, and it must be documented, and that's required by standards. Ask yourself what journal entry might be made. Don't care about fraud, care about fraudulent financial reporting. Don't talk about fraud, talk about fraudulent financial reporting. Ask the question, are we done yet? And abandon procedural auditing. Now, what are the 2 most important paragraphs in the handbook, in my opinion? And I'm going to start with 315.38. And there it is, all of the words. We're going to go through this in detail. But 315.38 says the auditor shall include in the documentation. This is a shall document section. And we can see discussion about the engagement team and significant decisions made. That refers back to 2 paragraphs. So those 2 paragraphs now fall into the shall document section. So we'll go through these in detail. 315.38a says shall document the discussion among the engagement team and the significant decisions reached. A meeting is not required. If someone tells you a planning meeting is required, it's not required by standards. Now, it may be that you're not documenting the planning discussion, and you've been told you need to have a planning discussion and you need to document it, and that's true. And you're just not listening. And someone says, okay, well, you have to have a planning meeting then, and document a planning meeting and have an agenda. Now, be careful with this, because if you say, oh, okay, the senior manager and the staff got together and had a planning meeting, doesn't qualify, because 315.17 says the engagement partner and other key members have to have planning discussions. So if the engagement partner is not involved, doesn't satisfy 315.38a, and indeed, if the engagement partner is not involved in this, the person with the most experience on the job, you're not going to have a good planning discussion. What does the planning discussion have to include? The application of GAAP, the financial reporting framework, and the susceptibility of the financial statements to material misstatement, risk of material misstatement. 3 most important words. And then paragraph 18 goes on to say the engagement partner is to tell others not in on the discussion what they need to know. And I'm not entirely sure that that's required documentation, but as a practical matter, if you don't do that as engagement partner, too much or not enough work is going to be done. So perhaps that means you should develop an audit program. 315B, risk assessment procedures, another really important thing. Now, this is written kind of complicated, but you have to have the key elements of the auditor's understanding. Now, paragraphs 19 through 25 are written in a very detailed fashion, appropriate for a large listed multinational corporation. We are probably doing much smaller audits with much simpler situations. It just says the key elements. It doesn't say we have to document everything in 19, 21, 22, 24, and 25. It says we don't have to do 20 and 23. Key elements. So we're going to have a high-level key element. The sources of information and the risk assessment procedures performed. Now, we do risk assessment procedures to assess the risk of material misstatement, so this is really important. Now, again, 315 is written to be appropriate for a large, by large I mean 20 billion, listed multinational company, really large company. And of course standards have to be written like that. If they were written for a $10,000 daycare, they wouldn't be appropriate for a large multinational corporation. So 315 actually does a pretty good job of having scalability provisions, and we need to use those scalability provisions to bring down the amount of work to be appropriate for the small client we are doing, the $1 million in revenue daycare, fractions of the size of the client that the standards are written for. So we will use the scalability provisions and we will do a lot less. We have to apply that. 315.38c, D&I, Design and Implementation. It's a risk assessment procedure. We need to document what we have done. Design of identified controls and determination of whether such have been implemented in accordance with paragraph 26. Now that is controls that we have identified in addressing risk of material misstatement, so we don't have to check the design and implementation of all controls, just the ones we pick as part of addressing risk of material misstatement. So that is not, some people say you have to do D&I on everything. In a large multinational corporation, that's perhaps not a bad way of doing things. In a smaller audit, there are not going to be that many controls. We don't have to look at them all. And the other thing the rest of us might do is to combine testing of design and implementation with testing of operating effectiveness and do them both at the same time. If we conclude that the only controls we think relate to addressing risk of material misstatement are also ones that we'd like to test for operating effectiveness, that's a simple solution. That's the approach the audit programs take. 315.38d, bunch of things that this requires. The identified and assessed risk of material misstatement at the financial statement level, sometimes called overall risk or overall responses. Risk of material misstatement at the assertion level, every component, cash, accounts receivable, accounts payable, fixed assets, at the assertion level, and revenues, expenses, depreciation at the assertion level. And it has to be documented. You have to document significant risks. Now, in a smaller audit, probably we are never going to have a significant risk. So we're probably not going to want the forms to say too much about that. And if there is a significant risk, we'll presumably know and we'll be doing stuff about it. But you have to document that. Risk for which substantive procedures alone can't provide sufficient evidence, and the rationale for significant judgments. Well, how might we do all of that? Now, have we properly identified risk of material misstatement and satisfied that paragraph? Now, a significant risk is far higher than high, really high. Special treatment, I don't think a set of forms can give you specific advice on how to deal with a significant risk because each one is going to be so different. But just recognize if there are any, probably not, you're going to have to deal with it and give it special treatment. Are there risks where we have to test controls? We always have to do substantive testing, but maybe we conclude that a substantive test isn't going to do it for us. And we have to test controls, particularly over completeness of things. They don't have controls over completeness of payables or receivables. Maybe we can't test it substantively. So I have to think about that. Rationale. We have to document the rationale. If it's low, if risk and material misstatement is high, we say why. This particular assertion, this particular problem, this particular journal entry that might be made, this particular testing is needed. So you document that. How do you document the rationale if it's low? Well, I can't think of a reason for it being other than low, higher than low. So I document that by leaving it blank. I couldn't think of anything. I did my risk assessment procedures. I couldn't think of anything. Therefore, a risk of material misstatement is low. I document that by assertion, and I'm okay, and I've satisfied that paragraph. The next most important handbook paragraph, and someone's going to tell me they're all important, but these are the top two, 330.28. You shall document the overall responses to address the assessed risk of material misstatement at the financial statement level. And we have some hints, which I'll go over in a sec. And you have to document the nature, timing, and extent of further audit procedures. You have to document the linkage of procedures with the assessed risks at the assertion level. So you have to be able to go backwards and say, these procedures address this risk, and you need to have that documented. I don't necessarily see a lot of forms doing that particularly well. I will show you how that is done in this set of forms. And then the results of audit procedures, including conclusions where these are not otherwise clear, that's almost automatic, but we need to document those things. Now, what are overall responses? Never heard of that. We have to go to the appendices, and it says overall responses may include, and lists 4 or 5 things. Because it says may, it doesn't mean we need to do all of them. It means we need to do 1 or 2 or 3 of them if we think that's relevant. So the first overall response is emphasizing the need to maintain professional skepticism. So I guess in your checklist you say, I emphasize the need to maintain professional skepticism to all staff during planning discussions. And I guess that's an overall response. Assigning more experienced staff. Well, we're required to assign appropriate staff. So if you have a checklist step saying, and this addresses the quality monitoring stuff too, I assigned staff with an appropriate level of experience to everything, that's an overall response. I changed the nature, timing, and extent of the direction and supervision of members of my team and review of the work. I did it differently. I had unpredictability in the selection of audit procedures. That's a tough one in smaller audits because often in smaller audits there's kind of only one way to do it. So you can't suddenly be unpredictable. You could have a checklist step that said I tried to be as unpredictable I could, change things around as much as I could. Not telling the client of what your audit approach is a good way of doing things, but unpredictable. So there are 4 things there. There are more in the section. You may decide that 2 or 3 of them are good enough as overall responses, and seeing they're all probably almost automatic anyway, that's not hard to do in a smaller audit. And the other thing to note, it's nature, timing, and extent. It used to be nature, extent, and timing, flowed more simply off the tongue, made a cute acronym NET. It's been specifically changed to nature, timing, and extent. Why? And standard setters did this on purpose to emphasize that the nature of the test is most important. An analytical test, a control test, a test of details, which is the most important, and the nature is the most important. The next most important thing is the timing of the test, interim or year-end. That's the next most important decision. And the extent of testing, doing 30 items, testing 30 sales invoices or purchase invoices, is the least important thing. How often in your audits is the extent of testing the first or only thing you think of? Let's audit expenses. Let's test 30. Well, standard setters are telling you, think about the nature of the test. Will an analytical procedure be better than testing 30? And when you do it is next most important. And extent of testing is the least most important. So the standard setters are trying to give you some hints about how you can be efficient and effective. Effective is important too. Just testing 30 items may not address the risk of material misstatement, may not be the right assertion. So you need to think about that nature, timing, and extent. And both of these are shall document paragraphs. And they are bringing into documentation previous shall paragraphs. So there's another example of this. And before we get into the forms, a choice that I have made on dating the representation, the engagement, the report, and the forms, I take it that they all must be the same. Audit is the clearest, review not so much, and compilation not as clear, but for staff training and for making sure we get everything done correctly, let's just assume that the representation, engagement letter, and report date are the same. Now, it's a bit confusing. In auditing standards, it says the representation letter can be shortly before but not after. I don't know what shortly before means. A day, a week, a month, a year, I don't know. Simplest for me, we draft all these letters. So we draft the audit report, we draft the rep letter, we find out from the client when the board will approve the financial statements, make them all the same. And I think it's also simpler that engagement, review, compilation are all the same too. Staff then understand. Get a rep letter, get an engagement letter, date the report, the forms have to be done. The engagement letter, it's unclear. The only time there is a specific requirement is in the first engagement. So the first time you do an engagement, you should get an engagement letter dated before the engagement begins. After that, it kind of doesn't make any difference. And we want the engagement and representation letter back, and so the way we accomplish that is, if you'd like our report and your financial statements, give us both letters. The checklist has to be done by then as well. The forms do not allow backdating, and standards say you have to be done before the report is dated. So the forms have to be done before the report is dated. The other thing about this and the position the forms take is the rep letter in particular, all three of them, audit, review, and comp. I want the board to approve the financial statements in the rep letter and have a date, and approve the adjusting journal entries proposed by us, and I want it signed by those charged with governance and management. Not exactly sure that that's necessarily required everywhere, but I'd like to keep it simple, and I would like all of that done in the rep letter. We're now going to discuss using the audit program generator, and a version of this presentation is available on my YouTube site. The sections of the form, the first page is the programs and conclusion page. It's the main page. It kind of lets you know at a glance where you're at in the audit. The crux form is where you assess risk of material misstatements. And then all the audit programs are linked to the crux form. In other words, if you assess risk of material misstatement as low for a particular assertion, that will then give you a target score for low for that assertion on the audit program, and the audit program will prompt you and remind you if you now got enough for low. And there are audit programs, cash, receivables, all the way through payable, and then there are checklists specified by standards, journal entries, contingencies, and so on. What are the topics we're going to talk about on this form? Well, we want to talk about the big red X and clearing the big red X, that's point 3. Want to talk about the fact that the form can be rolled forward, and we want to talk about the various sections. So this is the audit programs and conclusion page. It's kind of an overall page. You fill it out to direct what audit programs you wish to prepare for what sections. 2 questions at the top. Is this a public company client? You have to do engagement quality review, or you may have otherwise selected it for engagement quality review. Why you would do that if it's not a public company, I don't know, but you might. And is this a first-time audit? So if you answer that first question, yes, the bottom checklist, their engagement quality control checklist, will appear. If you answer it no, it will disappear and you won't be required to complete it. If you say it's a first-time audit, the bottom 2 checklists will appear. If you say no, they will disappear because you don't need an initial audit engagement checklist if it's not the first-time audit. So then we have all the other possible sections: other assets, other liabilities, profit-oriented or not for profit-oriented. So you will toggle them. You have cash, you say yes, and an audit program for cash will pop up. We don't have investments and investment income. That program is hidden. You don't need to complete it. And all the way down through payroll. Now, journal entries through going concern, those all have to be done. You can't turn them off. Standards require certain things to be done. Segments depends if there are segments, and the last 3 we talked about. So there are the index references. You will see that for prepaid expenses, that has been completed, and we've got 2 green tick marks beside that audit program. There's a date the preparer did it, date the reviewer did it, and reference to significant matters. We have to document if there are significant matters. Significant matters are going to be beyond an audit program. A significant matter might need mention in the audit report as a key audit matter. It will need extensive testing. Maybe if there's a significant matter, we can't complete the audit. I don't know. They're really big. They're really, really significant. So we just have to indicate whether there are any, and if there are, we'll put in a reference and say, okay, here was the problem, and this is what we did. But in terms of a normal audit, risk and material misstatement being low, moderate, or high, these forms deal with that and give you target scores for low, moderate, or high. And we see which ones aren't completed, and we see the number of steps on the program that are complete or incomplete. So that's the audit programs and conclusion page. Probably a page you want to look at if it's a large audit as the audit progresses, because it will tell you the progress of the file. This is the crux form, components of risk under examination. A friend of mine gave me this acronym because he said it's the crux of the audit. He's quite right. So the structure of the form. We have all the components, and we have already indicated that cash is applicable, so there will be an audit program, and investments is not applicable. And we have the assertions that relate to cash, and we have a preliminary assessment of risk and material misstatement, which will have to be updated, and we have a preliminary assessment of control risk as this is cash. Probably there are no controls to test, so we're putting that as we're not testing it at all. And intended audit approach, where the intended audit approach will be written. So that's the structure of the form. I'm going to talk about it in more detail in the next slide, but just want you to understand what it looks like. And it looks like a blank piece of paper where you have to write stuff down, and that's exactly correct. You may or may not have to write something down about risk factors. You will have to assess risk of material misstatement. You will have to plan how much control testing you're doing, and you will have to write something down in the intended audit approach box. So what do we need to write down? What will the crux form help us document? What will the crux form help us do? Well, we're required by standards to document why we've assessed risk of material misstatement. And so the simplest way of doing that, by the way, you have done your risk assessment procedures as required. They are documented in the checklist. Did everything we were supposed to do, can't think of a risk factor. Well, it's low. Then I'm not going to write anything down. And that documents why I thought it was low based on my risk assessment procedures. Couldn't think of anything. You also want to tell staff preparing a program of what you want as an engagement partner. There's actually two ways of doing this. You could, in a larger audit, you probably would, you would write down, these are the things I want done. These are the key aspects of what I want done in the audit program. Or if it's a smaller audit and you are doing the engagement yourself as the partner or with a single assistant, you might decide, I'm just going to do the audit program. And as I said, you can roll this forward. So perhaps the audit program from last year is exactly what you want. So in that box, you might then just write, see the audit program. I've already developed it. The assessment of risk and material misstatement, high, moderate, low, or negligible. That produces a target score. Now, I'm not going to provide a detailed explanation. There is an explanation available. It's included with the forms, but basically we use the risk model. Inherent risk times control risk times detection risk has to equal 5%, which is audit risk, which is what we have to reduce it to. Now, standard setters have taken all these numbers out of standards to, I don't know why, but they're very helpful numbers to give you guidance. Now, you shouldn't do this as absolute numbers, professional judgments allowed, but to generally guide yourself by inherent risk times control risk times detection risk to come down to around 5%, decent way of doing things. So that is to help us do enough work, but it's also to help us not to do too much work. Key message of the risk model, don't do too much work. And it's guidance only, and you're adjusting your judgment, and you'll adjust what you do based on your judgment. As I said, message of the risk model. Assessment of control risk. Now, when doing our risk assessment procedures, we've come to a preliminary conclusion about whether or not the client has good controls, and we will probably have also come to a preliminary conclusion in a first-time audit or based on last year of whether or not control testing will be a useful source of evidence. And if it's not a useful source of evidence, we're going to mark X and we're not doing any control testing, because there's no point in doing control testing if it's not going to produce evidence. In the form, a limited amount of control testing is called a moderate reduction of control risk. Who cares? M means we're doing limited testing. My experience is more extensive control testing, doing 20 or 60 or 100 items, often doesn't work. So to do more extensive than limited testing of control, particularly in a smaller audit, it's a partner call. The bigger the audit gets, and once you get up to the size of a multinational corporation, you can't do it without control testing. You have to report within 15 or 20 days of year end. The only way you can do it is by doing an interim audit and doing control testing. In a smaller audit, that's often going to be inefficient. And some components are not applicable. There are often no controls over cash, particularly in a smaller audit. The controls are often sales receivables receipts, purchases payables payments, payroll, and inventory, maybe, if they have inventory. So those four are the components where you might conceivably test controls, but this is again part of planning, and it's part of your assessment of control risk. Here is an example audit program. And we see the big red X. This program is not completed. We see on the top there in the right-hand corner, we have a list of numbers. Those are our target scores. 18 is what is required by my math based on risk and material misstatement. We need 18 points. And using a bit of a Delphi technique, came up with point scores for each of these things. So a reasonably simple analytical procedure, step number 1, gets us 4 points. And in this particular audit, it has been decided that for cutoff, it's worth 5 points. Don't know why we decided that. But what you will notice is the box turns blue. So the reviewer can look at it and go, ah, we have decided to increase the amount of evidence we got from this test for this assertion. I agree, that's fine. We have said no to the additional analytical procedures as part of step 1. So those are all blue and there's no value there. So all of these steps have mathematical scores assigned to them. They add up, and we see at the top 3 they're red. We have only got 17 points for occurrence. Is that a problem? Can we decide, for instance, that we need to do an additional substantive procedure selected from later on in the program? Or are we just going to change the 4 to 5? That's your professional judgment. Decide sufficient appropriate audit evidence. This is, your decision is displayed. Whatever you've decided to do, it's displayed. You will notice for cutoff, we've got 24 points, more than 18. So that might say, you know, maybe we should look at this. Maybe we're doing too much work. Or you might decide, you know, and sometimes you will have a step that gives you a fair amount of audit satisfaction, but it's really quick to do. So you go, yeah, I'm over auditing, but it's a really simple test, takes a couple of minutes, I'm good with that. If it's a test that takes days, you might say, think I'm deleting that test and replacing it with another. We see the gray spots, and we are required to document an expectation, so I have filled in my expectation here. I compared revenues to prior years because I expected this year to be similar to last by revenue type. That was my expectation. So I have documented my expectation of my analytical procedure as is required. Step 1 and 2 there, practitioner's conclusion based on the analytical procedures performed above, the presumption that there is a material risk of fraud relating to revenue recognition is not applicable. The rebuttable presumption has been rebutted. We got to do that in every audit. Very important. Signed by the partner. Got to be done. And doesn't give us any satisfaction, but it's something that has to be done. And again, the file reviewer has several prompts. They've got the red X, they've got the red boxes, they've got the blue boxes, they've got the gray boxes. This helps them conclude in their professional judgment whether or not enough audit work has been done. So to repeat a bit, the purpose of the math in the programs is guidance only. You need to use your own judgment. And if it's been changed by anybody, it's changed to blue. This highlights to the reviewer and prompts the reviewer to consider it. It's also done by assertion, which is required by standards. And we're required to test by assertion and provide linkage. So we have to provide linkage of how the procedure we did related back to the assertion. That's required in 330. And this format of audit program does that. Prepaid expenses. Here we have concluded materiality is $100,000. I'm making this up. Prepaid expenses are $2,000 this year and last year. Can't imagine how it could be wrong by a material amount. I'm going to set this as negligible and do very little work. And so the step I am going to do is compare this year to last year because I expected it to be similar, and it was. Gets me 5 points. Negligible is 3. I'm done. And I'm not doing any other audit procedures. And we see at the top and at the bottom for ease of use, the target evidence and total target are displayed. We see incomplete or invalid entries are 0. 4 of 4 are completed. They're completed by being selected as no. You will also see that we may need to add audit procedures. I decided to stop at 2 empty boxes. I think if you're going to add audit procedures, you're going to fire up your word processor and write a list of procedures down. You need to hook them to assertions too. And you need to describe why they are satisfying. So I think the reason I've only got 2 is if you have 1, you can do this. If you have 2, you can use it. If you've got 6, I'm not going to provide 6 spots. That's just wasted space. Write all 6 procedures down, hook them to step 13, say, and we're done. So that's how the prepaid expenses or any time you thought risk of material misstatement was negligible might be dealt with. Oh, and I should have mentioned, on the revenues receivables program, we are dealing with both revenues and receivables on the same program because sometimes an analytical procedure directed to revenues also gives us evidence of receivables. We don't want to forget that, so that's recorded on that program. So as I said, we assessed this as negligible risk of material misstatement, and we did little work. Going concern, this is one of the sections, and this is changing, so this is the pre-2027 rules as opposed to the post-2027 rules, but that'll get updated. The section in professional standards gives us a list of things to do. So this audit program quotes that entire list, and you conclude that you've done them. You will see we have either or sections. So the either is, the top one is, yeah, it was pretty simple and everything's okay. The bottom one is, it's more complicated. I need to write something in the gray box. Both of them have gray boxes, perhaps if you want to say something, and you might say nothing of interest. So there are a series of questions. You have to answer them all. And these are designed for, well, actually they work in up to small public companies. They're designed particularly focused using scalability provisions to be used in a small or very small audit. I think standard setters think a small audit is anything under $500 million. I exaggerate to make a point, but we are doing small audits, $1 million in revenue or less, small daycare, small not-for-profit organization. So these forms have to be scalable and applicable to large and small audits. They're not going to work for the audit of a multinational corporation, but that wasn't my practice, and that's wasn't what I designed them for. And as I said, this is going concern. It's changing. One of many sections where standards specify procedures, so do them. And if there's an or question, if you answer both parts or fail to fill in a gray part, the checklist won't clear, and you'll pretty quickly figure out how you deal with that. The big red X. The big red X indicates that the checklist is incomplete. And this was in response to one of my frustrations that you have a 4 or a 5 page checklist and there's an incomplete box and you're doing the file review and you miss it. And you can be sure then that someone else who comes and looks at your file will go, hey, you forgot to complete this checklist step. You go, ah. So what I wanted the big red X for was to let me know that at least I had completed all the checklist steps. And then I know that it's all done. Still have to do a proper file review, but at least you know all the checklist steps are ticked off. And there is a yellow exclamation point beside each step. And when it is properly logically completed, we'll talk about that, you get a green tick. And once you've got green ticks on every audit program, the big red X on the audit program clears off. And once you've got all the big red X's on all the programs cleared off, the big red X on the whole checklist clears off. And at the end of each, there is a total of cleared and uncleared steps. You can roll forward the file. On the configuration page, you can delete all initials and dates, but the gray areas and the audit programs remain completed. Presumably you spent some time coming up with a tailored audit program for each client. You don't want to have to start that over again, copy it from last year's file. The gray areas remain completed, so you will need to go through and conclude on whether risk of material misstatement has changed between years and whether the things in the gray boxes are what you want done this year or not. So clearing the big red X, it clears page by page. Individual audit programs clear when the individual program is cleared. The programs and conclusion page clears line by line and fully clears when all is complete. And there is logic to the various steps, and some of them are different. It's pretty self-evident. If you answer both parts of an either or question, or you fill in both parts of a question, it won't clear, because logically that's not what you're supposed to do. And if you don't answer it at all, it doesn't clear. Now the checklist is to some extent designed to be easy to review. The no red X means all the boxes are complete, so that's a nice thing to know. And the reviewer can then focus on the gray areas. Are these appropriately filled out? The reviewers can look at the blue spots on the programs. The reviewer can think about whether or not the various mathematical totals work and decide to change them perhaps. The other thing the reviewer has to think about is there an indication of risk of material misstatement? And if there is, has this been documented on the crux form? And then has risk of material misstatement been set at moderate or high? Have the right assertions been picked? And have audit procedures been done? Next topic, using the audit checklist. So the same for topics, big red X and clearing the big red X, same way. This is a form that has to be completed annually. It's really, we've got to check that we've done these things every year. The gray boxes don't carry forward, but I was worried that people wouldn't pay proper attention to that. So it has to be completed annually. And we'll talk about the sections. These are the sections of the form. There are rather a lot. It's rather a long form, but materiality, planning discussion, risk assessment procedures, skepticism, fraud, that's going to have to get bigger. Planning completion, audit of disclosures, audit completion, documentation or review, consideration of control environments, consideration of client continuance and independence. All things we have to do and document. So the big red X, this is the same as before, and it's the same in all of the checklist compilation and review as well. The X indicates the checklist is incomplete. Completing all the lines removes it. I found it annoying when I missed clearing a step. You turn the yellow exclamation point to a green check. All clears when the last question is cleared, and you can, there's a total at the bottom. How many am I missing? If the big red X is still there, you can't figure out why. It will tell you, well, there's one. Go find it. The form has to be completed annually. It just does. Best way I thought to do it. So again, clearing a line, the purpose for the checklist is to remind us what standards require, serves as documentation if all that is needed, but of course there may be more needed, and the gray areas are provided when it's concluded that something more is needed. So there are several types of questions. Again, you all require an initial. You select from a drop-down menu. The date is automatically put in because who did it and the date is required. And again, anytime there's a gray area, you complete it, either in the checklist or on a working paper. And this is all supposed to be cleared before the report date. That's what the big red X is to help with. It's required by standards. Do it. Here's a section of the form. I think this is the first question. The first thing you have to do is document materiality. The form reminds you you've got to document overall materiality, planning materiality, whatever you want to call it, and you have to document performance materiality, which is normally less, often by the amount of expected uncorrected errors. Now technically, you have to document this. Technically, all you have to say is, in my professional judgment, I set it at $50,000. If you feel inspired, you can say, well, I did that for user needs or my expectation of user needs. Or in this case, we've said, well, I picked 5%, which is one of the benchmarks you can use. And expected uncorrected errors are 10,000, so PM is 40,000. And I signed that. I'm the partner. So that's how you might use that form and how you might satisfy professional standards. So in many of the forms, I already have text in the gray area to prompt proper consideration. You need to update it. And as I observed, I actually said more than is required. There's nothing wrong with that, but that doesn't mean that you have to do that. Here's part of the checklist. We've done analytical procedures because we're required to, so we've ticked that off. Yes, we did that. Someplace in the file we should have documentation. The next step, you can see we've clicked both done and not applicable. So that's obviously wrong. It can't be both. So we still have the yellow exclamation point. We have to decide, is it done or is it not applicable, and fix that to clear the step. So two different types of step logic. The first step needs the entry of an X to confirm that we've done it to clear the step. And the second question, as I said, we've answered both parts. Pick one. So there are various ways, various logic steps in the questions to assist you in making these determinations and documentation. You have to answer it the correct logical way. Doesn't take long to figure this out. Now, as a reminder, the purpose of risk assessment procedures, which are done and documented in this form, is to identify the risk of material misstatement. And any time you identify a risk of material misstatement, you must describe the response. A couple of paragraphs require that. My preference is risk of material misstatement is identified only in one place. I've seen where people identify risk of material misstatement all over the file, and so I was doing a file review, and I find all these places where risk of material misstatement is identified, so I start tracking these to an audit program. I find that 2 or 3 of them weren't addressed. And when I went and talked to the audit partner, there was probably a valid reason, but the documentation looked terrible. So I want risk of material misstatement all identified in only one place, and in only one place where we clearly tie it to assertions and then clearly tie it to audit procedures and then effectively tie the audit procedures back to the assertions. So that's what the crux form is. Only one place. If you identify it, put it on the crux form, say why, say which assertion, design audit procedures to address it. So this is a risk assessment procedure. Identify the types of investments the entity is planning on making. Often the answer is none. My preference is not just to ignore the question. People like to see this documented. We like to remind ourselves to think about it. But typically, the answer is going to be none, and that clears the step, initials, and date. If there are investments, you can try describing them in the gray area. Probably you're going to say, here's the working paper where the client's given me some information. So that's an example of how we would document the successful completion of a risk assessment procedure. We are required to document the kind of business the entity carries on. Most of my clients, retail store, restaurant, if they were an audit, probably weren't, but a couple of words is sufficient. If you're talking a multinational, publicly traded, listed corporation, you're probably going to have a working paper to describe that, and these forms probably aren't going to be conclusive enough or inclusive enough. Big firms all have their own set of forms which will deal with this. And as I already said, is retail store enough? Maybe, maybe not. It's up to you. You need to decide whether that's sufficient, appropriate documentation. And the box keeps getting bigger, or refer to a working paper. I said that before as well. One of the things that standards say we're supposed to do is emphasize the importance of discussion of matters at all times. In a very small audit, there may be no such discussions. I like to have a checklist step that I can say, yeah, I did that. The next one is a similar question that just hasn't been filled out yet. And as I say, this is a documentation prompt. I wanted to emphasize it. I wanted to document it. That's why it's in the form. And as I said before, this was designed to help me review the checklist. No red X means all the boxes have been filled out, all the gray areas have been filled out. I can focus on the gray areas. Do I like what has been written in all the gray areas? And am I satisfied that any indication of risk of material misstatement has been put on the crux form? That's why the checklist looks like this, is for me to review and to decide that I'm happy with what's gone to the crux form and the assessment of risk of material misstatement. What other forms are there? And there are more than there are on this list. Engagement and representation letters are integrated into the forms. There's not necessarily a checklist question that says get this representation. They're in the standard rep letter. It's assumed they're there, or they're in the standard engagement letter. Group audits. Group audits may be more than you think. Even if you do the audit of both the parent and the subsidiary, that's probably a group audit. So go look at that group audit form and check that section. You may be doing a group audit and not know it, and there may be documentation that you're missing. Review and compilation forms are available, as are review and compilation engagement letters, quality management forms, and there are a number of other forms. There's a quality management guide. If there are unusual items, as I've said, you have to refer to standards. Now, users tell me that they have found, and this is my intention, but they have found, yeah, it's largely intuitive. After you spend a couple of minutes looking at the forms and figuring it out, they all work the same way, roughly, though individual questions work differently, but they're all in the same. There are many different categories, but they're all within a few categories. And they've also found that little training is needed. This is something that staff can pick up quickly on their own with a little bit of additional guidance. So that was my intention, and users have told me that that's what happened. There is a YouTube site. Go to YouTube and search for Professional Workshops Inc. Watching any of these is verifiable as long as you get someone to watch it with and they can verify you and you can verify them. You could buy lunch for staff and look at some of these things. These videos also count as ethics PD, as long as it's about doing things right, and very few of them are about doing things wrong. There are about 170 videos, most audit, professional standards section, and other topics. The other thing is the video, most of which is in this presentation on using the audit program generator, is on the site. Search for using the audit checklist, also there. And this video will be up with documentation. So thanks for listening.